Willkommen zum Reinsurance Podcast, live aus Baden-Baden. Wir sind hier für die jährliche Rückversicherungskonferenz, wo sich führende Mitglieder der Branche versammeln, um über die neuesten Trends, Herausforderungen und Innovationen zu sprechen. Bleiben Sie dran für exklusive Einblicke direkt von der Konferenz. Oh, welcome, Jen Braney, to the show. We have a wonderful pleasure in having you here as Head of International Cyber at Gallagher Re and as my immediate predecessor as chair of the IIL Reinsurance Committee as well. Side comment. But also on the sunniest day I've ever experienced in Baden-Baden. How are you doing? Are you enjoying the hot weather? Did you come prepared?
Not quite. I brought my gloves, scarf and a winter jacket. So the one thing that I actually needed was a pair of sunglasses. So yeah.
Oh well, next year perhaps. Next year.
Won't complain too much.
But you're here because you are our cyber expert for the show today, and I understand it. This year's a special one for cyber at Baden-Baden.
It is, even more than usual, because there is the first market event for cyber this evening. So very, very excited about that. It's been, I think, 18 months in the works.
Wow.
So yeah, we got there in the end.
And what's led to this event being staged? Why now, I guess?
Yeah. Well, I think a group of people thought, there's a lot of talk about cyber in the market, and Baden is a great place to talk about reinsurance. It's about time we combine these two things together. So here we are.
Amazing. And so I'm a bit of a novice in cyber, I'll be honest with you, and I'm sure many of our listeners know reinsurance, but not cyber in particular. Could you help us understand a little potted history of, cyber reinsurance? And I guess cyber insurance and reinsurance go hand in hand, I suppose.
Yeah, and actually reinsurance is hugely important in cyber insurance because it's about 50%. It's not quite 50% or over 50% as it has been previously, but, just around 50% of cyber insurance premium goes to the reinsurers. So hugely valuable partnership between insurers and reinsurers for cyber. Not just traditional reinsurance, quota share, non-prop, but also on the turnkey side of things. So there's a lot of cyber capability that gets brought to carriers who don't have any cyber capability. That's particularly important in the international space, I would say.
And when you say those capabilities, what sort of things does that involve? Is it recovery type stuff, or
It's the product, so it's the actual wording, the coverage. So both SME commercial and personal lines now.
Makes sense, yeah.
Personal line cyber is all the rage, actually. And it's also the underwriting, the pricing, introductions to the incident response companies as well. So it's really full service. And then, of course, the actual reinsurance.
So in perhaps quite a positive way, the tail wags the dog in the sense that reinsurers are almost equipping the insurers to go and do cyber.
Exactly. And really it's the distribution piece that they don't have. So that's what they're getting out of the partnership. Oh,
amazing. And what sort of scale of involvement are you expecting? Cyber is obviously a big topic. Are there many cyber people here at Baden-Baden normally?
I would say it's increasing every year. So this year we've got a few first-time reinsurers in the cyber space who are attending. So I have actually a little guide for first-timers that I send around. Just, don't book certain meetings, for certain venues because it's about a 20-minute walk.
Yes.
That sort of thing. But also brokers, a few more cyber brokers attending from Gallagher Re as well this year. I think it's definitely increasing every year.
Oh, amazing. And how does cyber re-broking differ, I guess, being on the broking side yourself, to other lines of business? What are you focusing on normally to manage that relationship?
Yeah, it's an interesting one because I'm actually almost becoming a bit of an insurance broker because there's so much of the turnkey side of things going on. So really you're having to understand that original product even more and how the incident response aspect plays into it. But you're also helping international clients grow the gross book. So it's not just, how high can we get the ceding commission or how low can we get the rate online on the non-prop. It's actually, how can we find the right partner who's going to understand your region and help you grow the original business. Because there's no point getting reinsurance if you don't actually have anything to reinsure.
Oh, completely. And so is there quite a lot of variation between different regions in terms of how they sell cyber? Are there lots of different products? Or?
Yeah, it's actually an interesting one because sometimes that's the feedback we get, that sometimes you get a global product that doesn't quite work in a local area and it needs to be actually simplified. But we also see some of the same themes, in customers not actually understanding what their value at risk is to cyber and needing some support with that. Sometimes the agents who are actually selling the product to the end customers don't fully understand what cyber is. So, from the Caribbean to Kenya, we get that sort of theme happening quite a lot. So some distinct pieces, but also just some general themes in common.
Oh, super interesting. And then on the reinsurance side, is it transferred in the same way most of the time, or are there lots of different non-proportional and proportional and other structures?
Quota share is still the bread and butter structure, but we are seeing a bit of innovation in the non-prop space. So aggregate stop loss was the kind of standard non-prop structure, but especially with the development of the cat bonds, and it's actually the ILS market who've really shown the way for the I don't want to call it the event market because it's technically not an event. You're defining aggregation language in a scenario, but we won't go into that. That'll take a few hours. So we're now seeing the traditional market catching up a little bit more and becoming more comfortable with the wordings and the approach. But, the ILS market did a fantastic job there.
Yeah, no, it's super impressive, isn't it? That cat bond that first came out, we've seen that seems to be an easy path forward now that the trailblazers have done the hard one to begin with. So probably more of that, would you say, over the years to come?
Oh, absolutely, yeah. So Gallagher Re Securities and the Gallagher Re cyber team did the first cat bond, I think it was a couple of years ago now, but it was really, 5 years in the works.
Oh, wow. Yeah.
Building up the knowledge to be able to, I suppose, help the investors understand the nature of the risk, the language, etc. So, it's really great to now see it as this fantastic, flourishing market.
Fabulous. And a lot of people at Baden obviously are talking about some broader trends and from other lines, things like Milton, things like social inflation and casualty. Is the cyber market affected by those, or are you isolated? Do you have your own hard and soft cycle, or are they related?
I'd say, it's an interesting one, and I kind of forget sometimes there are other classes of business, just so in the world of cyber. But I think the really big topic in cyber at the moment is quite surprisingly increasing comfort with the tail risk. Everyone has been, going on about the systemic exposure, but I think incidents like CrowdStrike, which didn't necessarily turn into this huge catastrophe people were maybe expecting. Also the Beazley Munich Re Gallagher Re cyber RDS project that just came out, where you've got the biggest cyber reinsurer, the biggest cyber insurer, and the biggest cyber reinsurance broker coming together to say, let's put our heads together, build a ground up open source cyber RDS for malware, and then let's share it with everyone and invite criticism and feedback and have a discussion about it. And the results of that were actually quite interesting, I think, in saying, these scenarios could be quite bad, but actually the market will be okay. It's not going to be the end of the cyber market if these things do happen. So I think that just gives a little bit more comfort around the tail risk, which means more capacity is coming into the market as a result. That's fascinating. It's almost like I don't know, you don't get confident in a way until you've had your first few knocks, I suppose, and maybe CrowdStrike sort of reassured people in a weird way that even if really bad systemic things happen, we might actually recover quicker than we thought, or have less actual loss than we thought. Has that been your experience talking to clients? Or? I think it's sometimes what we don't often realise is the thing that makes cyber so scary. It's this interconnected, systemic, global issue. Is actually strangely the thing that can actually help mitigate incidents as they happen. So we saw with CrowdStrike, to be fair, it's not a malicious attack, but the solution was provided pretty quickly. And then it was just a case of, updating systems. So you're actually mitigating the loss as it happens. Now, you can't do that with any other line of business. And we also saw it with Kaseya and NotPetya as well. So there are a few data points now, not to say that's always going to happen, but it is creating a little bit more reassurance. So these problems aren't solved, but I think through market collaboration and discussion and, hopefully the event this evening will also help towards that. People are just getting a better understanding of these things. I mean, everything was new at one stage, right? And we're all afraid of new things. But after a while, you get a little bit used to it, and then it becomes a bit easier.
Fascinating. And you mentioned, I guess, people being a little bit afraid at first, and having now done the first couple of cat bonds and that being a more ready area to explore in future, are you finding that the alternative capital markets are less fearful now that they've seen these examples? Because obviously, it took them a long time to get to the idea of, if there's a big hurricane, you don't get as much money back. If there's no hurricane, you get your money back. How do you describe that to investors in the cyber world? If there's a big cyber attack, have they come to terms with that more easily, less easily?
Well, I think with CrowdStrike, some of the sponsors got back to the investors pretty quickly to say that we don't think this is going to be a problem. Nice. And that's before waiting for the storm to end, right? Yeah, so that kind of live monitoring and understanding your portfolio is fantastic for that. So also Gallagher Re issued a report, and we use our tool called TARD, which is a combination of outside-in scanning and claims data to actually go, what is the attack profile going to look like? What are the industries and the company sizes that are going to be impacted? And that report was released a couple of hours after the news broke, and it was pretty accurate in terms of the kind of companies who are ultimately going to be affected by it. So I would think that would increase a lot of confidence by everyone, including the investors. But certainly they're calling us up now. Before several years ago, we were the ones phoning people up saying we should really talk about cyber. But now people are reaching out in Baden and saying, let's have a chat. It's great.
Oh, amazing. And you mentioned sort of the data that comes into play. One of the key themes that's come out of this conference so far has been data quality, I think, in a more general sense. How would you compare data in the cyber market versus the reinsurance market at large?
Oh, this is such an interesting topic, and you can talk for as you have done on this podcast, which I'm a avid listener of. It's improving, I would say, but I think it's just because it's cyber and it's digital doesn't mean those data issues just miraculously go away, right? It's the same challenges of capturing the data from the end customer, the insurer getting the data, the broker, then everybody else in the chain. But I would say there's some really interesting advances, particularly by the InsurTech MGAs, and they really are worth looking into, I would say, because some of them are actually looking at underwriting without actually needing to get any data. They have their own data publicly available, and they use that to do the underwriting. So I would say it's kind of thinking about risk in a different way. If it is a digital risk and it's the digital age, why not underwrite it digitally without the need for a proposal form? But controversial. Yeah. And certainly some will say there are other factors to consider. But again, hopefully something we'll be speaking about this evening.
It takes me back to the old age of when Airbnb came out, and it was like, the largest hotel company in the world has no rooms, and maybe that's the new future for insurance. The largest sector of insurance has no proposal forms.
Amazing.
Who knows?
I like that.
Who knows where we'll get to?
Yeah.
But Jen, anything else you'd like to share before we wrap up here in Baden-Baden?
I'd just say there's never a better time than now to get into the cyber market, and especially the international space. Yeah. There's a lot of interested capacity and capability out there. So it's just finding the right partnership. And, that's what Baden's all about is, meeting up with your partners. So
exciting stuff. And you've got your event tonight, so best of luck. Hope it goes really well, and hopefully it'll be an annual fixture. And enjoy the sun.
Yes.
Let's hope that stays out too.
Yeah.
Thanks again for coming on the show.
No, thanks a lot, Ben. Cheers.